love doing these because really get to dive into the nitty gritty of each strategy. Obviously, we'll go over the rules of the overnight system, the overnight trading strategy. We'll go over each rule step by step. We're even going to do a demo tonight. We don't get to do that in the morning calls. So I'm going to show you guys step by step and even take trades with the overnight trading strategy so you guys can see exactly how it's done from start to finish each night. Everything from taking the trade to going to the lot size calculator and making sure that your risk is appropriate. Things like using a journal. We're going to do that together tonight, which will be awesome. We'll update a little bit on the market if we have some time, like with how some of our other trades are doing. Not a lot has changed from this morning, so I don't know how much we'll do that, but really just want to make sure that you guys have a good game plan in 2025 trading the overnight system, that you know how to do it. And then also we want to go over the Reaper at the end, making sure that for those that trade the Reaper and want to trade the Reaper, that you guys know how to do that. So, and for those that don't know, the Reaper is just another version of the overnight trading strategy that's very, very lucrative. So, we're going to talk about that and its results and its journal and so on. Before we get started, though, as always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys, well, let's go ahead and get started. So, like I said, we're going to spend some time. I got my chat box pulled up perfect. We're going to spend some time going over the overnight trading system. First of all, for those that don't know this, if you go to the website under members, there is a, sorry, I was just doing some crypto work this afternoon. If you guys go under members and click on overnight trading, this is like the overnight trading hub, and we're going to keep adding stuff to this in the future as we, in fact, I was even thinking about having like an overnight trading like group or forum or something like that where everybody can post the results in here. We kind of already have that in the groups feed, but this is good. You got the book, so a lot of people don't know this, but we've actually got a little book right here, just right on the overnight trading page, that you can read up on, and it teaches you everything about the overnight trading system, how it works. You can just kind of passively go through each page in this book right here. Goes through the sequence multiplier and what it is and why we use it. It goes through the exit of the strategy, how to get in and out for profit and for losses. We also have another video you can watch right here too on the system. So super cool. So you can actually read through that, and that gives you all the information you need about the overnight system. And then down below, you actually have the up-to-date results. So these are live results with the half Sydney box version of the overnight strategy. Here's the full Sydney box version. Here's the Reaper. Everything like how many trades we've taken, winning trades, losing trades, the win rate, gross and gross profit, gross profit, net profit, average win to average loss, and the RR ratio all included right here. So you can kind of go through each strategy and uh, kind of get an idea of what to expect when you trade these systems. Like what would be your win rate and so on. Pretty accurate win rates at this point. We've got a very large sample size in here, so um, the strategy in itself typically remains around these numbers no matter how you slice it. Even good times, bad times, it remains around that number. Here's the actual transaction. So down here, you can actually see the journal of every single trade we've ever taken. So these are up-to-date trades from today and so on, with the half Sydney box version of the strategy down below. You've got the full Sydney box version of the overnight trading strategy right here. Right below that, you've got the Reaper. So here's the Reaper version of the strategy. Every single trade that's ever been taken with the Reaper is also included right here. So pretty cool stuff. Um, yeah. So anyway, you guys can view that just right on the website, which is pretty awesome. Now, let's go into what the overnight trading strategy is for those that are kind of brand new. So, first of all, we got to go over just one thing to preface this. So, Forex market, all right, that's what we're trading. Obviously, you got stocks, you got Forex, you got commodities, futures, and there's also crypto world, right? So, Forex is kind of unique because it actually is the biggest market in the world. In fact, if you were to take every single market, equities, if you took uh, the crypto markets, commodities markets, and everything combined, they still wouldn't surpass the trading volume, the daily trading volume of Forex. So, Forex is, in fact, the biggest market in the world. A lot of people don't know that, but it is. I think more folks internationally know that, but I've noticed here in the United States, we focus on a little bit more in the stock market, equities. U.S. equities are kind of the king equities around the world. Um, this is not to be prideful, it's just a fact. U.S. stocks drastically outperform international stocks almost every single year, and they've done so for nearly 100 years. So that's why a lot of focus in the United States is on stocks when people trade, not so much Forex. And also, accessibility is another thing, too. It's very difficult to trade. Like if you say you live in the UK or you live in Australia, hard to buy individual US stocks or get access to our options market and so on. And so, a lot of people choose the Forex route, which I actually prefer. Even though I live in the United States, I prefer the Forex because of the 24 hours it's open, right? So in stocks, one of the downsides to it is it's only open 7.5 hours a day. And those hours are usually during prime working hours. So if you have another job and you're busy during the daytime, it's very hard to trade stocks because by the time you come home and you're ready and you're kind of settled in and ready to start trading, well, you can't really do it because well, the market's closed. Not the case in Forex, right? Forex is open 24 hours a day. It's separated into four different sessions. You got the London, Tokyo, Sydney, and New York markets. Okay. And so it's kind of like each day the market has this torch and it passes the torch to the next session. And then that session passes the torch to the next session when that one goes to bed and finishes the day. New York market, for example, is open. New York Forex markets open from 8 a.m. to 5 p.m., right? Once it closes, there's the Sydney market opens next. And then after Sydney, about a couple hours later, Tokyo opens. About 6 hours later, the London market opens up. And then about 5 to 6 hours later after that, the New York market opens back up again. Okay. So, something we should know about Forex trading is that in those four different sessions, there's some that are more active and some that are less active. The most actively traded session is, you guys tell me. Anybody in the chat, I want to get some participation here. Does anybody know what's the most actively traded Forex trading session of the four I mentioned? You got Sydney, Tokyo, London, and New York. Which is the one that's most traded? Perfect. Got an answer right here. Roger says London. Yes, London is the most actively traded session. Nice job, Lauren, as well. Very good. Yeah, London is the most actively traded session. So, um, and when is that open? Right? Like when is it most, when is it open? London opens actually at 3 a.m. Eastern time. Okay, that's 2 a.m. Central, 1 a.m. Mountain, and 12 midnight Pacific. So, if you live in the United States, that's a really difficult open to be awake for because that's prime sleeping hours, right? And so if you try to trade London, I mean, gosh, you're giving up all your sleep to be able to trade it at the open. You'll have to catch the latter end of it when you wake up in the morning, perhaps, which a lot of people do. But, to get the open, that's kind of a difficult thing to do unless you have something like the overnight trading system, which we're going to dive into that in just a second. But one other thing I want to touch on is London is the most actively traded session. What do you need as a trader to be successful? You need volatility. You need movement, right? And so the way you get movement is when more participants are pushing the market. So the London market's most actively traded session, 73% of all foreign exchange transactions happen during the London market. And so if you don't trade that, you're kind of missing out if you think about it, right? Right? It's a lot of price action to miss out on. So that's when I guess that's one of the reasons why we came up with the overnight trading system. The market breaks out really hard when London opens, especially because the session that just precedes London opening is the Sydney market. And Sydney, no offense to Sydney, doesn't have as much price action. The market does not move as actively during Sydney, right? In fact, I'm going to use an indicator right here on the euro dollar. This is the most popular trading instrument in the Forex world. This is basically your Tesla of Forex, right? Like, or I guess your Google or your Facebook or something of Forex. Um, it's a very actively traded pair in Forex. Okay, so the euro against the US dollar. Right here, I got this sessions indicator. If I go to the settings, you can see I've got London, New York, Tokyo, Sydney. These are the 4 different trading sessions in a 24-hour period. If I turn on London, I want to show you guys something. If I just specify London only, this is highlighting every London session. I want you to notice about something about these candlesticks. Notice the big movements that take place during London. This is 2 nights ago. The biggest moves in the last couple of days happened right smack dab during the middle of the London session. Right here, here's London the day before that. London over here, here's London over here. Big, huge move right there during London on the 10th of January. And then you keep going and not as much there, but then huge move right there. Then you get over here, huge move, and so on. So, and then if you turn off London, let's actually flip that off and just do Sydney only. What you'll notice about Sydney is that the market actually doesn't move as much during Sydney. It's a very quiet session. Now, it doesn't mean it doesn't move. Obviously, the euro is going to move in every single session, but I mean, just look at this. Like, that's hardly any movement at all. Hardly any movement at all right there. Hardly movement right there, and so on. Okay. So this is the session that is preceded it, meaning it just opens and closes just before London opens. Okay. So that creates a phenomenon. That basically means you go from basically nothing where the market's going sideways to pretty much everything where the market just breaks out. That actually supplies a tremendous opportunity for us. This is actually what prompted people to create what's called the London breakout strategy. If you go on YouTube and just search Forex trading London breakout, you will have hundreds and hundreds and hundreds of people willing to, including myself, I'm probably on there too, willing to teach you the London breakout strategy. Now, everyone has their own version of it. We got our own. I think ours is very much superior to it because of how we manage risk and so on. But um, so we're not the first to call it, we call it the overnight trading system, but other people might call it like a London breakout trade. Okay. So I just want you guys to be aware of that and feel free to go on YouTube sometime and find out what other people are doing. I'm sure you'll find what we do, very much superior to that. But it's always good to get more insight and information from other people to see what they're doing, right? Okay, so anyway, we're trying to take advantage of that breakout. So that brings us to the strategy. So I personally love my sleep, and so I don't want to stay up until, I don't want to stay up till London each day to take advantage of the London breakout just because that's just so difficult. I don't think I could do that long term. In fact, I used to. I remember like 7 or 8 years ago, I traded the London breakout. In fact, it was a different version of it in itself. I'd look for a little reversal right at the London Open. It would be like a 10, 15-minute long trade. And I'd get up in the middle of the night to take it. My wife hated it. My wife definitely hated it. I actually hated it too and eventually stopped doing it. So that's when we kind of got into more of this style of taking advantage of the London breakout, which I think, like I said, is a much better way to go about it. So what we're trying to do now that we've kind of set the stage, what we're trying to do is set up a trade that will take advantage of that big move that's coming. We're trying to capture real estate in the Forex market.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So the market may be inside of in fact, I'll draw this up for you guys. The market could be kind of going sideways inside of a box here, right? During Sydney, it's just kind of going sideways. And then the market's going to choose a direction while we're sleeping during London. It's going to go up pretty hard or it's going to go down pretty hard, right? We don't know which way it's going to go. We just want to take advantage of whichever way it wants to go, okay? We want to capture as much real estate as possible. Okay, it's a pretty simple London breakout concept, or even just breakout concept, period, is what we're trying to do. Um, okay, so that's what we're trying to take advantage of. And the advantages of this, by the way, the advantages of doing this is if the market does, let's say, break out hard by the time you wake up in the morning, you'll make quite a bit of money on that move because the market was down here. You bought when it initially broke out right there. And now when you wake up in the morning, the market's now up here. So now you've made that difference from here to here. All of that money is your profit because you bought low and now you're selling higher, right? That's the whole point of the London breakout, or in our case, what we call the overnight trading strategy. Oh, yeah. And I love what Lee says. He says, and sometimes it does both. Yeah, absolutely. It definitely can do both. I've seen it do both, and many times, and even this morning, it did both. Which we're going to get to that part in just a second. Absolutely, we're going to get into the like once we set up the trade, then I'm going to show you what it could and can't do, and so on. All right. There's more to this, obviously. That's just kind of a basic synopsis of what we're trying to do each day. If the market goes sideways when you're looking for a breakout, you're typically not going to make any money. Like, let's say you wake up in the morning and this just keeps going sideways. You're not going to really make any money if the market just keeps going sideways, right? And that's going to happen several times during a week. The market's not really going to break out much. But when it does, holy smokes, it's a lot of money. And there's actually ways you can increase this. This is the part that you'll want to stick around for. There's actually ways you can increase that profit big time when it finally does break out. So you'll want to stay tuned for that. Okay, so let's dive into this. So the way we set up this trade, here's kind of the rules of the strategy. Is we're looking to wait for Sydney to kind of develop in the evening time here in the United States. So Sydney develops usually, Sydney opens at 6 p.m. Eastern, and it's open actually till 2 a.m. Eastern. Now, you don't have to stay up till 2 a.m. Eastern But you do want to at least give it a couple of hours to kind of develop, maybe even several hours if you can wait that long would be good. Once it's kind of developed, then you can go in there and put a box around the Sydney high and Sydney low. Let me give you some examples of this. In fact, let's go back to, in fact, let's go back here. This was a pretty good trade I think we took on the 8th. This is a really good example of a successful trade. And actually, this one was a really good one on the 6th. Earlier this month, we had some pretty good trades. So let's do a rewind. Actually, let's do this one because it's a buy trade. I think that's going to make most sense to people. Let's go back over here. I'm going to go to a 15-minute chart. And yeah, so this is the Sydney market. Okay. Right here, I'm just going to do a rewind. Everything in light blue is Sydney. And then this is Sydney from the previous day. And then this is Sydney over here from the previous day. So this is basically the end of the day. Like if you're going to bed here in the United States, you're about to wrap up your day, and prepare for the next day. This is kind of what the market would look like. Okay. And the idea is you're going to come in here 5 nights a week for about like 10 minutes, 5 or 10 minutes. And you're going to draw a box around this Sydney session. Okay, so whatever price action has done during Sydney, you're going to draw a box around that. So you can kind of see that there was a low right there and there's a high up here. And so you're going to draw a box around that price action. Okay. If the price action was bigger, then you would make a bigger box. If the price action was smaller, you would draw a smaller box and so on. All right. So in this case, this is our box, right? And then what we're going to do is before we head to bed, what we're going to do is we're going to put a buy stop order. So does everyone know what a buy stop is? For those that don't know, a buy stop order is a pending order trade, meaning that it's a trade that will trigger, it will buy if the market breaks out. If it goes up, we'll buy into the market, but we only want to buy if it in fact does break up, okay? So we'll place a buy stop order in the top right corner of that box, basically at the Sydney high or just a pip or two above the Sydney high is the best place to put that. Then you're going to draw your stop loss and you're going to put this on the other side of the Sydney box right there. I'm using these projection tools. You can get these on TradingView. On the left side, there's a toolbox over here you can grab. And then I star them so I can use these whenever I need them. Okay. Once you've put in your stop loss, you're going to drag your take profit pretty far. This is 5 times whatever your stop loss is. Okay. Pretty big old take profit. We're asking the market for a lot of real estate. Okay. A lot of real estate. This is something that retail traders don't really do. They don't really have the guts to put a take profit all the way out there because they want to take their profits sooner, right? Well, we're going to be a little different, right? We're asking the market, hey, if you're going to break out tonight, we want to capture as much of that real estate as you're willing to give us. That's why we put it 5 times. So if you look at this, you'll notice right here it says 25.1 just below my cursor. That's how many pips is the Sydney box. That's my stop loss. So my buy stop goes at the top of the Sydney box, and my sell, or excuse me, my stop loss on the buy goes on the other side of the Sydney box. This is every night you're doing this exact same thing. You're coming in before bed, you're putting a buy stop at the top and a stop loss on the bottom. Then you're going to drag your take profit 5 times that amount, which is approximately 125 pips. All right. 125 pips. So a lot of profit. If that thing rolls, you're going to make a lot of money. Okay. If that thing just takes off, and it happens. It definitely happens. In fact, we're anticipating that that will happen. It may not happen every day. In fact, it won't happen every single day. But on the few times that it does, gonna make a lot of money, right? So we have to do that. If we start bringing this take profit in, this is killer, right? This will kill you because what happens is if the market winds up breaking out really hard and you could have made 5 times your take profit, or excuse me, your stop loss, and you cut yourself short, that's a lot of profit to miss out on. So we really do want to put this way out there, and every day it's 5 times. All right. So you're not like picking a price level. You're not trying to be like, oh, let's see, I'm gonna just guess that the market goes there, or I'm going to guess that the market goes maybe, right there. None of that guesswork. It's all taken away with this strategy. This is an extremely objective only based strategy. One of the things that's really nice about trading a strategy that's super objective is it installs confidence. Okay. So if the strategy starts working and you see results over time, it's a lot easier to go out there and feel confident to and risk your own money or go out and try to audition for a prop firm. A lot easier to do that. Same thing when you lose money with the strategy. A lot of the losses become predictable. I know we don't want to lose, but at least the losses will become predictable and we'll know how much those losses can be. That's a very valuable thing because if we start taking trades with other strategies that don't have these objective rules and we lose money, it's going to feel like we're losing a lot more than maybe we actually are because we don't have that confidence. So that's what's so nice about this is again, you're not picking a level. You're just saying, okay, we put a take profit that's 5 times our risk. Now you can, Lee says, can you do 5x or 6x? I actually don't mind if you go 6x. If you want to take that out to 6, that's fine. That's actually not a bad idea. Probably won't affect you too much, but right now the rule is to put it at 1 to 5. So about right there would be good. Now you're not done yet, right? You've got to place your sell stop order. So let's go ahead and do that together. I'm going to go to this bottom right corner. I'm going to click once and I'm going to put in a sell stop. I'm going to drag the stop loss up to the top of the Sydney box right there. And then I'm going to drag my take profit 5 times. Okay, you can see it jives up about 5 times, 5.02. That's fine. That's totally fine. You'll notice I've got a 25 pip stop loss right there. And the reason why it's 25 pips is not because I chose 25 pips or because it's always 25 pips. That has nothing to do with it. It's just because on this particular evening, the Sydney box happened to be 25 pips. If that box is only 20 pips, tomorrow, then we'd use 20. If the box winds up being 30, then we go 30. Okay, so we really don't care what this box does. We just care that we put a buy stop and sell stop around that box. It's kind of our guiding pointer there to tell us what to do as far as where to put our entries is that box right there. And that box does change on a day-to-day basis. That that is a variable that does change. However, the whereabouts on where you put your buy stop and sell stop do not change. Okay. Then you got this take profit down here that's 5 times. Okay. So this is what you should be left with when you're done. It's just you're framing this up. You're saying, okay, this is what my trade's going to look like. I got a Sydney box right here right before I go to bed. It's 25 pips. I got a buy stop ready to go right here. I got a stop loss on that buy right here. I got to take profit 5 times that. That's all the way up there. I got a sell stop in with its accompanied stop loss and take profit ready to go. It looks kind of like a butterfly, right? Or like a little airplane that's got the fuselage down the middle and then a take profit on or a wing on both sides. That's kind of what it looks like to me, at least in my mind, it looks like that. All right. Once this is done, now you got to figure out your risk management. Now, this is actually a pretty traditional London breakout trade. You'll actually find a lot of other coaches will teach you to trade this exactly like this as it is and not do anything else. They'll just tell you throw in a lot size or whatever you choose for your risk management and have at it. Okay. Problem is I've actually done a lot of study on this. This actually doesn't make a lot of money if this is all you do. If this is your only edge, you might not actually make a lot of money. Let me explain. There's 3 things that could happen to you when you set up this trade. So let's say you took these 2 trades and then you closed the laptop and you went to bed. What could happen? One perfect example is the market will just go straight up. If it goes straight up overnight without any real detour along the way, you're going to make quite a bit of money because that thing's going to go 1 to 5 RR and you'll wake up in the morning to a profit that's 5 times what you risked. If you risked $1,000, you'll wake up to 5 grand. If you risked $100, you'll wake up to $500, right? That's pretty awesome. Okay, so that's one scenario. Another scenario is the market just goes straight down. You'll trigger into a sell and you'll make money on the sell. That's another option, and that's actually a great option too. Now, let me show you some other examples. Let's say the market breaks up overnight, but then midway through the night, it decides to beeline it the other way. You're going to hit your stop loss if that happens on your buy. That means you're going to lose money. Then you're going to trigger into a sell. And if that sell keeps going down, you could actually make quite a bit of money on that sell if it just keeps going down. That's a second option. Now, what if the market does exactly what I just showed you, but instead of continuing down, the market goes back up? This is what happened last night. So the market can go up, trigger you into a buy. It can go down, trigger you into a sell, and then it can go back up again and hit your stop loss. So when you wake up in the morning, let's say you wake up over here, you're like, oh, okay, great. Let me check, see how my trades did. And you pull it up and you're like, ah, dang it. Right? Who's been there? All of us last night, right? Like every single one of us was there last night. That's exactly what happened. So the market will trigger you into buy. Then you go down, you hit your sell, and you wake up and you find out that that sell lost too, and you're like, "Where did my trades go? Where are they at?" And then they both lose, right? Not fun when it happens. I laugh at it because I've been through it so many times. By the way, expect that to happen about 2 to 3 times a week. So a lot of you might be like, wait a second, that's 2 to 3 times a week. Should I just check out right now and like not trade this? Well, hang on. There's more to the strategy. There's a little bit more to this that makes this thing work. But yeah, the market will actually do that about 2 to 3 times a week, and it can really eat into your profits if you let it. And I'll show you how to kind of limit that. But there's really no way to avoid that because we don't know which days the market's going to do this activity. Obviously, if we could miss out on those days where the market just kind of goes sideways, that would be ideal. It's just really hard to predict that. I don't know how you would predict that. So we just have to work with that. And so this is an example of a day where you actually just give money back to the market, but it's all within a system. It's all an allotment that we're okay giving back to the market because it's an amount that we were premeditating at, before we even took the trade. It was okay. All right. So those are your different ways. Obviously, perfect scenarios if it just breaks out either way. We don't care which way. Okay, now that we know that, let's dive into more. So, like I said, most people will stop right there and they're like, okay, done. I just taught you the London breakout strategy. Now, I have proven statistically that if that's all you do, you'll actually kind of spin your wheels. You might make a little bit of money month to month, but there's enough losses that you'll have when the market goes back and forth like this that it actually, if that's the only thing you did and did nothing else, you would actually lose money on the London breakout, even if every 3 or 4 days you got a really big breakout. Just wouldn't be enough profit. Okay, so that stinks because obviously we're here to make money, aren't we? So there's more to this strategy. So one of the things that we came up with that's been very creative and innovative is this sequence multiplier right here. So this is actually our journal with the overnight trading strategy. I want to direct your attention to this right here. This is called the sequence multiplier. It's a matrix. And what it does is it tells you what to risk each day. So for those of you that are kind of new to trading, have you ever gone on to like apps like Robinhood? Have you ever gone to TD Ameritrade or maybe Webull or something like that and bought shares of Apple or bought shares of Tesla or whatever, and because you thought it was a good investment? Everybody kind of starts that way, right? And you just go out there and you're just like, I'm going to buy 3 shares of Apple. Well, how did you know to buy 3 shares of Apple? Well, a lot of it comes down to your budgeting and how much the cost of Apple is. Some stocks only cost $5. Some stocks cost $200 per share. So obviously a stock that's $200, you can only afford, so many of those if you're on a limited budget. If you're trying to buy a stock that's only $5 per share, you might be able to buy dozens or hundreds or even thousands of those shares, right? Because it's within your budget to buy lots of those because it's only $5, right? It's the same thing when I buy cryptocurrencies, right? One Bitcoin right now is $100,000, right? Per Bitcoin. But there's other cryptocurrencies like XRP that's only $3.30 or something like that, right? So you can obviously buy more XRP than you can buy Bitcoin because obviously Bitcoin is many, many, many times more expensive. So we have to kind of go through the same process in Forex trading. We have to figure out not how many shares we're going to buy because we don't buy shares in Forex, but we got to figure out how big of a contract we could buy because that's how we trade Forex is in contracts. And you can buy smaller contracts like a zero point zero 0.01, that's a micro. You can buy a mini contract, which is $10,000 of currency. You can buy a standard contract, which is also just known as a standard or just contract. When I say I buy a contract of the euro, that's just $100,000 of currency, right? So we have to know how many of those we're going to buy each day. And so we have to have a percentage. Okay. So a percentage of our account that we're willing to risk. And so when I come in here, I use the sequence multiplier. When I'm on the first day of trading the overnight trading strategy, I'm going to risk 0.25%. I use this thing called the 1.5 multiplier. And what this does is it says if I lose money, even if it's just a little bit, or if I lose on both trades, like I just showed you on the previous screen on TradingView, if I lose both ways at 0.25%, then I'm going to go the next day and trade 0.38%. Why would we do this? Well, we're going to increase the risk slightly to the tune of 1.5% or a 1.5x multiplier each day until we get a big win or up until we get a big win or until you hit day 6, which is the last day in the prescribed sequence that we've given you. Okay? The reason why we do this is because if you have a losing day, we need to get that money back. And not only are we here to get our money back, we're also here to make money, right? So obviously taking on, losses or taking on expenses with any business and especially with trading, there's going to be losses. But at the same time, we got to get those things back. It's the same thing if you were to start a company. If you were to start let's say you wanted to flip burgers and sell burgers on the corner. It's going to cost you the money to buy the buns. It's going to cost you money to buy the burgers themselves and the condiments and chairs and for people to sit on and so on. The business licenses, all that costs money. But at the end of the day, you want to sell enough burgers to be able to get your money back from the money that you spent plus a markup so that you can become profitable, right? Same thing applies in Forex trading. We have expenses. They're called losing trades because you can't win every single trade on any strategy. We got to get that through our heads, right? Every single strategy has losses. So at the end of the day, we got to get our money back. With any strategy, we do have to do this. This is our way of getting our money back. We slightly increase the risk. And the reason why we do this is because not every single day the market's going to go sideways. Eventually, that London breakout is going to prevail. There's going to be a max breakout, just a huge move in the London session. It always comes. It doesn't always come on like clockwork, but like on a specific schedule. But statistically speaking, once a week or once every 2 weeks, there's going to be a massive breakout on the euro dollar during the London session. All right. And so our job is to position ourselves to make as much money possible when that breakout comes. Okay. That's our job. Okay. And so one of the ways we do that is through the sequence multiplier. So if I were taking this euro dollar trade that we just set up over here, and I was on my first day, I would risk 0.25% risk, and then I would take the trade. If that trade won, great. I made money and I had no losses. Fantastic. The next day, I'd come back and trade at 0.25% again. If I lost on the second time I did this, on the second day, what I would do is when I come back on the third day, I would trade this again, but I would move up to the next level of the sequence. And I would do this until I got a win. So every day I would set up this trade, set up the London breakout trade in my account. If I lost, I'd move up. If I won, I'd take my money and go back to 0.25. Let me show you how I do this. I'm actually going to demo. I'm going to log into a trading account real quick. Actually, real quick, let me just show you this. I did a rewind here to show you what this looks like. So you can see right here, here's a pretty big breakout during London on this Monday, January 6th. And so obviously that is going to make you a lot of money when that breaks out hard while you're sleeping. And that's the whole idea, is to capture that breakout each day. This is where you make your big money, not only because the market breaks out, but like let's say the market breaks out really hard, but you're also on your day two or day three, day four, day five, day six of your multiplier, and it breaks out. Holy smokes, you can absolutely come away with huge profits. I'm going to show you how to set this up, and then I really want to get into the journal because the journal is so fun because you can see those big profits come into play. It's fun to kind of play around with the numbers sometimes. So I'm going to log in. That's what I was going to do. So I'm going to log into my trading account. Give me 1 second, guys. I'm going to pull the screen over here and I'm going to log into my account and we're going to take a trade together. I want to show you guys how to do this each day. Okay. Yeah, this will work. We'll use this account. Okay. Okay, so I'm logged into a trading account on TradingView. You can log into your own if you want to do this too, but I'm not ready to take the trade tonight. I'll still take the trade with you, and I'm going to pretend it's like a couple hours from now because I usually take these trades usually between 10 and midnight my time, which is between midnight and 2 a.m. Eastern. However, I will say I've needed to change my schedule up a little bit, so I'm going to start taking these trades at 10 p.m. Mountain, probably starting on Monday or Sunday night. I just need to start to go to. I need to. It's just a lifestyle change. I need to go to bed a little earlier, so I'm going to start taking these trades around 10 Mountain, which is like um, I think that is midnight Eastern time. So anyway, now you guys can set it up when you need to. I'm okay. If you have to set this up at 9 p.m. Eastern time or 10 p.m. Eastern, that's okay with me too. I'm not going to be mad if you have to set this up earlier. All I ask is that if you set it up at a specific time that you stay really consistent with the time that you do set it up. All right, guys, so let me show you to do this. So this is the current market on the euro dollar. So right here, I've got the current Sydney box. Okay. Oh, this is the Sydney session. By the way, you can get this indicator on TradingView. All you got to do is just go to indicators, search sessions, and then it's right here. It's called sessions on chart by Aurochs. And then you can start getting the Sydney session on here. What you're going to do is you're going to take a box and you're going to box up this price action. That's all you're going to do. Each night, you're going to do this first thing. Then what you're going to do is you're going to drag and drop your long and short projections. We'll start with the long position in the top right corner, and then we're going to drag the stop loss to the other side right there. That's approximately 11 or 12 pips. Then what we're going to do is we're going to drag this take profit 5 times. Okay, 5 times. Big take profit. I get a lot of slack for this. A lot of flack, I meant. Get a lot of flack for this. But I'm telling you, the take profit, having such a lucrative take profit is what makes or breaks it for you in this strategy because on the few days in a month where that thing rips, you're going to come away with so much profit that it's just stupid. It really just gets stupid how much money you can make when that thing rips. So we just have to be patient and get set up for that when that actually does happen. Okay. All right, so this is it. So I've just set up a buy stop and a sell stop on both sides. You'll note right here, this is about 11 pips. It looks like I got 11 pips as my stop loss. So we'll put 11 in. You can see it says 11 right there. And then right here it says 11.5 just below. For my take profit, you'll notice it's about 57 pips. And right down here, it's about 56 or 57. That's about 5 times what my stop loss is. So that's perfect. Okay. So now I can go ahead and set this up. Now, before I take this, what if I were to just sell right now or buy right now? I don't even know what my lot size is going to be. So I'm skipping a step, right? The next thing I have to do is go figure out what my lot size is on the website. So if I go to tradingwithsteve.com, and by the way, this is for anybody watching this in the recording or anybody maybe watching this on YouTube, you can use this tool. This is a free tool that we offer. And so you can absolutely just come to this website and use this anytime. All right. So you're going to go to tradingwithsteve.com. You're going to go up to free tools. You're going to click lot size calculator and you're going to go through this with me. Okay. So first is the instrument. By the way, what are we using this for? We're using this to make sure that we take the right contract size. It's as if we were trading stocks and we needed to know how many shares we're going to buy or sell. Same thing right here. Okay. All right. Then we're going to make sure it says euro dollar, which it does. Your deposit currency is your local currency. Mine is the US dollar. For most people, it's the same thing. For your stop loss, what is this? This is exactly what we just figured out right here. It's the that box right there. It's 12 pips. Okay, so we're going to go back over to the lot size calculator, or excuse me, not 12. It's about 11. I think we decided 11 was it when we went right here. 12 would be fine, but you want to make sure it's as accurate as possible. So we'll say 11. In fact, if anything, I'm actually thinking rounding down is better when you're picking your stop loss. So if you even wanted to go with 10, I'd be fine with 10, but we'll just do 11. Okay. Then what you would do is you'd come back over here to the lot size calculator and finish off. This is a $100,000 account I'm trading in. And then so we'd put 100,000 in. If your account was 1,000, you'd put 1,000 in instead. Or if it was a million, you'd put in a million. Okay. For your pip size, this just stays at the default. Don't change this. This is part of how things are calculated. Don't touch that. Leave that alone. Right here on the risk, you do need to mess with this though. This is very, very important. This is in fact the secret sauce, right? This is what makes the strategy work, is what risk you put in each day. It needs to be on schedule. There is a schedule to how we do these things, right? So the risk when you start a sequence is 0.25%. So on your first ever day trading this strategy, you will do 0.25%. If I were to lose tonight, tomorrow I would take the trade, but instead I would go to the next spot in the sequence, which would be 0.38%. And so I'd come over here and put in 0.38 instead if I were on day 2. I'm actually on day 4 tonight, so I'll be going to 0.86 just because I've had a couple of losses over the last couple of days. So I'll be increasing to the step 4 tonight. But for the sake of demonstration, let's do 0.25%. You'll want to leave this contract size at $100,000. Don't mess with that. That's something that's broker specific, but most brokers, 90+% of them are going to be using the contract size of $100,000 per contract. So leave that alone. Then you're going to click calculate. And then this is going to tell you what lot size you need. Actually, it's going to tell you a couple of things down here. First thing is it's telling you is your lot size on this trade is 2.27. Okay, not everybody uses lot size. Some people use units like TradingView. TradingView uses units. So I can't use this number. I'll be using this number. It's kind of like the difference between Fahrenheit and Celsius. It's just they both describe temperature, but one of them is calculated differently than the other. It's the same thing here, right? This is abbreviated as lots. This is abbreviated as units. Okay. So in TradingView, they use units. So we'll be using that number. This last number right here is money at risk. So what does money at risk mean? This is how much money you stand to lose if the trade doesn't work out. If you wake up in the morning and the trade has disappeared and you're wondering where it went, it's very likely you lost, and this is how much you would have lost per trade. Okay, there's 2 trades each night, so you could lose up to $500 on a 100K account. That's a 0.5% risk in one day. If you're not okay with that, then we need to go back to the drawing board. That's something I can coach you on, figuring out what's appropriate for your account and so on. But on a $100,000 account, taking $250 of risk is really not a big deal. That's so low actually for a $100,000 account. Okay, it's not a lot of risk. Now, if you're trading on $1,000 account, $250 is an extortionate amount of risk. Okay. You don't want to be risking $250 on a $1,000 account. That's 25% of your account on one trade. Not cool, right? We have to follow things on a schedule to get the outcome that we want and the return that we want over time, right? And so this strategy is designed to provide that outcome and that return so long as we stay within those rules, okay? So now we click calculate. Perfect. We did. Now we're ready to take the trade. So I got to remember this number right here, 227272. So now when I go to set up this trade, let's do the sell first because it looks like the buy may be breaking up right now. I'll tell you about that in just a second. So first thing I got to do in the order window is I got to change this to stop order. Okay. Make sure you change that to stop. If you leave it at market, you're going to take a trade at market, and that's not good because this is meant to be a breakout trade. If you do a market order entry, you're just getting in at whatever price is available. Not good, right? Price, very important. This is the price where you're going to get in at. Now, here's how you know. Oh, shoot, I forgot. I need to delete this. I've got this stuff from the other day still on here. Yeah, I need to delete these. Sorry, this is from the other day. Let me delete this stuff. Here we go. Okay, now we should be good. Perfect. Yep, we're good now. All right, let me open up that new order window again. I'd click sell or buy, whichever one you want to do first. Okay, we'll start with the sell. Make sure you click stop. And then for the price, if you're selling, the lower gray number over here on the y axis is where you're selling. Where did this number come from? It's from the framework that you built at the very beginning. So these things over here that we drew up on the chart, the y-axis over here is a projection of what you drew up. So it can like the gray numbers are your entry prices. These green numbers on the top and bottom are your take profit prices. These red numbers are your stop losses in the middle. So that's what that is. So the lower gray number, 1.02964, that's my selling price. Then I got to put in my units, which was this number right here, 272,272. So 27272. Okay. Um, then I got to click on take profit and click on stop loss. The easiest thing to do, guys, is just hover over their trade. It'll tell you right here, right there. It says 11 pips. I'm just going to put an 11 pips right there for my stop loss. Right down here, it says 55.7. Let's round that up. Let's go with 56. So I'm going to have a 56 pip take profit. Boom. Okay. And this trade is actually ready to go. But before I send this trade off, here's how you can double check your work, because I know it gets kind of nervous when you're like, and by the way, even if I'm not really nervous about taking this trade anymore because I've done it so many times, but I still double check my work. Here's how you double check. If that number right there, the dollar amount at risk, matches with, oh, excuse me, with this number over here, then you know you did it correctly. And ours is exactly perfect. So you're good. And if it's off by a penny, sometimes I've noticed it can be off by a penny just with how things are done. It's okay. But if it's off by more than a penny, then something didn't quite go right. And so you got to go back and figure out your lot size again, or you got to figure out your stop loss. That's usually where you could go wrong. So this is ready to go. Let's go ahead and send it. And so you'll notice when I send this, it's got a sell stop right here at the lower side of the Sydney box. I got a stop loss up here on the upper side of the Sydney box, and I got a take profit down here at the, pretty far away, right? 5 times our stop loss. And that sell's now ready to go. Now I just have to take the buy. I'm not going to do that because I'm running out of time. And actually, by the way, if this ever happens to you, let's say you're setting up the trade and the market's actively at the top of the Sydney box or the bottom when you're setting this up, this is the one time you could actually just go ahead and take a market order, because the market's actually currently making a new Sydney high at the current moment. So you could just get in at market on that example. That's the only time you would do that, though. Otherwise, you're going to put a buy stop up here instead. All right. Let's see. Roger says, I made a noob mistake the other night that cost me big time. So reminding myself to always double check. Yeah, no, that's good. Yeah, it's easy to make mistakes as far as like a lot of places you can go wrong. You can go wrong with your take profit, your stop loss, your lot size, your entry price, and so on. There's a lot of stuff that can go in there. So yeah, it's always good to double check before you go to bed. And good to check even before you even take the trade, period. So, um, cool. So there you go. I'm going to go ahead and close this trade now. And then, by the way, you'd have to still, you're only halfway done. You still got to take the buy trade. So, and then once you do that, you're done. I'm going to cancel this order. If you were to wake up the next day, the next thing you got to do is you got to go over here to your journal. You want to have some kind of journal. I have my own, which is kind of nice. I can give you a template one if you need it. You're going to want to log your results each day, find out what it did. If it made money, great, log that result. If it lost money, great. Same thing, great. It's part of the process. Log that result. If it's open in the morning but hasn't closed, let's say it's like up or down, break even, I don't care. Let's say it's open. I suggest closing these trades in the afternoon about 1 to 2 hours before the New York market closes. It closes at 5 p.m. Eastern. So, little suggestion there. I don't recommend that you close this first thing in the morning just because the market's still going. London doesn't even close until 12 p.m. Eastern. So, I recommend that you hold this trade into the afternoon. Okay. If it's still open. If it closes naturally, you're done until the next day. You're not going to take another trade. There's no revenge trading. You're just completely done. All right, guys, I got to show you a couple of things, and I'm really running out of time. I think I'll just go a couple of minutes. But any questions about how to take this trade each day? I wanted to go through how to do this so that you guys can do this on your own each night. Okay. It actually only takes about 5 minutes once you get good at it. Everything from setting up your framework to going to the lot size calculator, it's only just a couple of minutes. All right. Now, when you're kind of new, or if you have some technological disabilities, which is okay, I work with everybody in between. It can take you a little longer. You might want to give yourself 20 minutes. And if you're really brand new and you're not very good with the computer, you might want to give yourself 30 minutes. Okay. And if you really need extra help, I've even done webinars with people like one on one calls at night, like where like during the time that you would normally set it up. It's per request though. So if you really want to meet with me and you're like, Steve, I need your help. I need somebody to just show me how to do this at night. I'm happy to do it. Just you got to request it though. Just like send me an email and let me know like, hey, here's a time that I could do it, Steve, and then I'll see if it works with my schedule to do that. And I'd be happy to do it. I do it all the time. So okay, before we wrap up, I got to show you guys. So the strategy itself is pretty awesome, obviously, right? So here's the results. So everything I just showed you how to do. Oh no, this is the one. This is the full Sydney box version of the strategy. The strategy actually has a below 50% win rate, and it's makes sense, right? You're asking the market for a 1 to 5 RR ratio, so that's really difficult to get over 50% if you're asking for so much real estate. It's kind of like lowballing. Imagine this. Let's say you go on Facebook Marketplace and you just go on, let's say you're trying to buy a car and you undercut every single seller by like $5,000. Most of them are going to say no. They're like, no, I'm going to sell my car for more. But you might have somebody that comes up and says, you know what? I'm actually pretty motivated to sell my car. Here it is. I'll give you $5,000 off, right? That's kind of how this is. I don't know if that's the greatest example, but basically we're asking the market for so much real estate that we're not going to hit every single trade. This is really important though, because most traders try to take their profits really early. We're a little bit different that way. We're trying to get bigger wins, right? So if you look at my average win rate here on a 100K account, the average win is $840. Average loss is $383. So we're getting more than double on our winners than on our losers. That's why we can get away with a 41% win rate. Net profit over 8 months is about $31,000. We're averaging about 4% a month. Okay, so that's kind of what you're going to get right there. So on a 100K prop account, expect to make about 4 grand a month. On a 200K prop account, expect to make about 8 grand a month. Some months more, some months less, though. All right, guys. I wish I had more time because I have more stuff I'd love to get into, but tonight was more just about showing you how to take the trade. I got to wrap up because we're going to do another webinar here in the next couple of minutes. We're going to talk about the scanner signals this week and last week. We're going to go over the COT report data and make sure everyone's on the same page on the scanner. So if you want to come to that, great. If you can't make it, it's also recorded. But I appreciate each one of you. Thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar.